Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview presentation series. Today with Fiore Gold, and Tim Warman, the CEO, is now with us. Hey, and good morning to Canada or the US. Where are you today?
I'm in Toronto, so it's good morning for me.
Yeah, good morning. Fantastic. So everything's fine, I hope?
All good.
Great, super. Yeah, Fiore Gold, you guys are producing gold in the US, and you are the largest gold-only producer in the US. Funny enough, you guys have done a great job so far, and the company is in very good status. And I think it's time for an update. And you brought us a beautiful, shortened and condensed presentation with you, which I want to bring up now. And I would say, Tim, the floor is yours.
All right, thanks, Jochen, and thanks everyone who's listening. So Fiore Gold, as Jochen said, we are a US-focused gold producer. We're a developer and we're an explorer. So we've sort of got all the bases covered there. And we are also, strangely enough, the largest 100% domestic US gold producer. All of the other larger gold producers have exposure to some much more risky jurisdictions. We see an opportunity here to build a mid-tier US-focused gold producer to really offer that kind of safe haven exposure to gold, particularly for US institutional investors. And we start with our main assets in Nevada, obviously the best mining jurisdiction in the world right now, according to the Fraser Institute. We have 3 projects there: our Pan mine, which is the producing gold mine. We have Gold Rock, which is right next door. That's our permitted development project that, once it's in production in a few years, will more than double our gold production in Nevada, take us up over 100,000 ounces a year if all goes well. And then just recently, we've picked up another exploration project just down the road called Illippa. Has a former producing mine on it, hasn't seen a lot of exploration. Very similar geology to our Pan and Gold Rock projects, so we're quite excited about that one.
How did you come on Illippa? Because it's, for me, really interesting that you got a former gold mine and quite close to you guys, actually,
it's
right?
Just down the road, and I'll show you that in one of the later slides. But it was in a portfolio of a private equity group that was looking to divest some of their smaller projects, and we looked at it, liked what we saw, made a bid on it, and got it. It was relatively inexpensive. I think we paid $1.4 million for it, and of that, about 1.2 was our stock. And it has no royalties on it, which is almost unheard of in Nevada. So it's a really nice little project.
Lovely.
Yeah, and we also have. Sorry, go ahead.
Do you have any historic resources already, or how do you know that this project is still fine?
Yeah, so all we have there are a couple of small open pits, very similar to the small open pit mine that we have at our Gold Rock project. They were operated in the 1980s, maybe into the early 1990s, actually operated by the same company that operated the little mine at Gold Rock. So we have a little bit of the records from that. We have some of the drilling data, but there are no formal resources or reserves there. We just really like the geology. It looks very similar to Gold Rock and to Pan. And we're keen to get exploring there. It's obviously an earlier stage project. Mm-hmm. Yeah. And then, all of these projects were picked up out of a bankruptcy transaction back in 2016. And really the Nevada projects were the main focus of that, Pan and Gold Rock. But along with that bankruptcy package came this project up in Washington called Golden Eagle. It's a 2 million ounce resource. It's open pittable. It's probably longer time dated. There's still a lot of work to be done on that. It's not permitted. We don't have a feasibility. We don't even have a PEA on it. But it's an interesting project nonetheless, and we're looking to unlock some value on that. But really right now, the focus is on Nevada. So Pan currently produces 45 to 50,000 ounces a year. Assuming Gold Rock begins production as planned in 2024, that will take us up over 100,000 ounces a year in Nevada. And then really we've been looking at, for the last couple of years, acquiring another U.S. producing asset that could build out that production portfolio. We'd really like to get up over 150,000 ounces a year. That has been probably the most challenging part of this whole process, is trying to find another asset in the U.S. that actually makes money. We don't want to acquire additional production ounces just for the sake of acquiring additional production ounces. They have to be economic ounces. They have to turn a profit. We're trying to treat Fiore like a real company, one that actually makes money and not just kind of produces gold. So that's our goal, and that's been the big challenge. What we want is something like Pan, and this is our Pan mine here. If you look at it from above, this is looking towards the east. What you see is 2 pits, very imaginatively named the North Pit in the north and the South Pit in the south. There's a major geological structure running through there called the Branham Fault that controls the gold mineralization, and that's where we see a lot of potential upside is along that Branham Fault in areas that have kind of promising indicators, gold in soils, gold in rock chip samples, the right kind of alteration, but that haven't been drilled yet. And so we're quite keen, and what you'll see over the next sort of 12 to 18 months is a lot of drilling at Pan to look to grow the resource and the reserves there.
Would that mean that, let's say, the longer term plan might be to, connect the northern and the southern pit to one super pit?
Yeah, I don't think that's going to happen. We've done enough drilling in there, but there is, and I'll show you on in the next couple of slides, there are a lot of drill targets, both along that Branham Fault and on some cross structures that we've identified as well. So, Pan itself it's a very simple mine, open pit, heap leach. We crush, we put it on the ore on the leach pad, and we produce gold in the ADR plant that we sell to various refiners. It doesn't produce any silver really meaningfully, no copper. It's just a pure gold mine, and it's also a very safe, very well-run mine. And I think you can see that in the economics. Last year, our full fiscal year of 2020, which ends actually our fiscal year ends in the end of September, so we're actually almost to the end of our fiscal 2021. But last year we produced 46,000 ounces, all in sustaining cost around $1,100. And you can see, that at that kind of gold price and that production level, we produced about 24 million in operating cash flow. These are all US figures. And about 17 million of that was free cash flow straight to the balance sheet. So, if you look at our cash flow per share in 2020, you're looking at about 24 cents US of cash flow per share, considering that we're trading under $1 US right now. We're really trading at under 4 times cash flow, under 5 times earnings per share. So we think, it's a demonstration of a well-run company that is trading remarkably cheaply. A lot of that is just because of our size. We are a small single asset producer, so we're very keen to grow the company. And I'll just say one last thing about Pan. If you look at Pan here on the left, you see the North Pit and the South Pit. This is looking at it straight from above. And all of those red symbols on the map, those red kind of ovals, are exploration targets that have been defined, as I said before, by gold in soils, gold in rock chip, arsenic and antimony, which are pathfinder elements to gold in the soils. None of those have been drilled. The only one that's been drilled is the one up to the left of the North Pit there called Mustang. We put 8 holes into that last year. 5 of those came back with shallow oxide gold mineralization, just like we're mining in the North and South Pit. So we'll be going back in the next few months to put more drill holes into there to try to bring that into reserves and resources. Typically we'll spend $1.5 million to $2 million a year, relatively modest spending on drilling in and around the pits. That's been enough to keep our M&I resources and our P&P reserves pretty much constant. So we're able to replace every ounce and every ton that we've mined. But what we really want to do this year is spend a bit more money. We'll probably be spending somewhere, just a little bit south of $8 or $9 million on drilling, really trying to push out the mine life, grow those reserves, grow those resources, show that this mine has a much longer potential mine life, than is currently formally defined by its reserves. So that's going to be quite exciting. There'll be a lot of drilling going on here over the next year. And with Pan is kind of running nicely now. We've optimized it. We've got a few little things on the go that might be able to push the gold production up by 10 or 15%. But really, Pan is chugging along quite nicely, generating cash flow that's needed to grow the company. Growth is going to come from Gold Rock. And so I'll just back up one slide here. This is that little open pit that I talked about before. This was operated in the late 80s, early 90s at Gold Rock. Pan sits just over that little ridge of mountains on the left-hand side there. Those are the Pancake Mountains, about 8 miles or about 12 kilometers as the crow flies. The pinkish whitish rock that you see in the back wall of the pit there, that's the mineralization. That's what was being mined in the late 80s. That's the kind of thing we're looking for. It's part of a large structure that runs through the area. And, one of the things we're particularly excited about it at both Pan and Gold Rock is the exploration upside. Right now, if you look at Pan and Gold Rock together, between the two of them and what we've mined out there, we've defined just over 1 million ounces in resources. But we think, looking at both those targets where you see the areas where reserves and resources are defined by drilling, the red areas, and then you compare that to the yellow areas, which are the exploration targets. I think, there's potential to significantly grow these through exploration. And again, at Pan, we're going to be doing a major exploration program this year. At Gold Rock, we're also doing a significant exploration. We've got about $10 to $12 million budgeted for drilling there. That program is about halfway through. We've been putting out drill results from Gold Rock throughout the year. And one of the really interesting things we're seeing at Gold Rock is that just off the north end of that red zone there in Gold Rock, we're starting to see some interestingly higher grades at depth. The typical grades at Gold Rock would be sort of a 0.7 gram per ton. But if you look at those drill holes that are highlighted there in that dark blue oblong, you see some of the more recent holes, 48 meters at 2 grams, 32 meters at 1.4, 38 meters at 1.1. These are significantly higher grades. Now, we're doing some work there to look at the metallurgy of those to see if it's different ore types, but you can add a lot of ounces with those kind of holes. So,
if you say at depths, to about what depths we are talking, is it still open pittable, or do you have to go underground?
No, it's
right?
Definitely open pittable. Yeah. I mean, eventually you may get something here even deeper. That's where you want to go underground. This has been kind
for
of
sure. If it makes sense, do it.
Yeah. Well, it's been a common theme at a lot of the Nevada gold mines, the Barrick and Newmont mines, where shallow open pit oxide was found to be underlain at depth by higher grade, sulfide ore that has to be treated, but still is a lot higher grade and justifies going underground. So anyway, this is all kind of, speculative. We need to do a lot more drilling there. We are doing a lot more drilling there.
Yeah.
There's rigs turning on that project right now. The goal is to have a feasibility study done on Gold Rock by about the end of March next year, and then go into a construction decision, with the plan being that, assuming we get a positive feasibility, which we're quite confident on, we would look to make a construction decision and then go into construction with the goal of getting Gold Rock in production in around 2024.
Okay, super. So I see here $64.6 million initial capital. Let's call it for $65 to $70 million. That's easier to calculate. I mean, if I look at the cash flow from last year, I'm sure that your cash flow this year is also very nice. But you just said that you want to drill like for $10-12 million. So this is financed all out of debt. But for me, it's like, as far as I remember that correct, you are debt free.
Yeah. So we have no debt.
So that would mean that you could easily go, let's say, to a lender or to a bank and say, hey, listen, 50 million and we are fine.
Yeah. No, we've had a lot of interest from potential project lenders. We would probably, do a typical mix of debt plus some equity. We haven't raised equity since 2017, so that's over 4 years ago. So we haven't diluted our shareholders. We haven't taken on debt. But as we start to grow, the cash needs to build this thing are going to outstrip the ability of Pan to generate cash, and that's fair. I mean, Pan's a small mine; it's taken us this far. I don't think there's a problem going to the markets to take us that last little bit. That will kick us up into the next league, really. And just again, going back to the exploration potential here, above and beyond the production, we've got all these targets at Pan, all of the targets at Gold Rock, and then Illipah up in the corner there. If you look at Illipah, I'm going to draw on the screen here, up here. That's maybe 20 kilometers away. You can see that Highway 50 runs right through the Illipah property. It's got great access. We can drill year round there. We do need to do some permitting up there for a larger drill program. We can do some limited drilling right now, but really our focus is on getting geologists on the ground up there, mapping, sampling, doing the sort of boots on the ground work that's needed to define drill targets up there. While we're doing that, we'll do the permitting over the winter, and then next spring we'll get in there, and do some drilling. So there's going to be a lot of drill results coming out of these two properties.
Let's dream a little bit hypothetical about future. Would it be possible if Illipah would be the next mine for you, which is years away, we know that, but could you use the infrastructure from the Pan mine already?
It's a little far away. I think you might be able to use the assay labs or something like that. But in general, I think you'd have to build a separate mine there, which is fine. I mean, there'd still be a lot of synergies just in terms of, the administration of running 3 mines that are within an hour's drive of one another. They don't need 3 separate full overhead kind of structures. And they can share resources as well. And that'll be the plan at Gold Rock as well. Gold Rock will use the same power line from Pan, and we'll use the access road from Pan. We've already put that in. It'll share a lot of the same team. We'll operate both mines. So there are a lot of synergies with having projects this close together. And I'll just briefly touch on Golden Eagle. Golden Eagle is up in Washington State. This is a longer dated project. It's really almost more of an option on the gold price. This project costs us $10,000 a year to hang on to. We don't have to spend any money on it. We haven't actually spent very much money on it, but it's got 2 million ounces of open pittable M&I resource. It would need some kind of an agreement with our neighbors up there, which is Hecla. Hecla, we have a very small land package, and so if you were going to put an open pit in, the pit would have to extend into Hecla's ground. We need an agreement of some sort with them. We talk to them on a regular basis. I was talking to their CEO just last week. As we move this project forward, I think as they do some more exploration work on their areas, I'm hoping in time we'll be able to get something done with them. But at the end of the day, it's a cheap option on 2 million ounces of gold. So,
and maybe a possible joint venture with Hecla.
We will hope. This is one of the last slides. Really, the capital structure of the company is very solid. 100 million shares outstanding. That's just about the same number of shares we had 4 years ago. There's 8 million options, RSUs, DSUs among all the staff at the mine and management. $82 million market capitalization, roughly in US dollars. No debt. $18.5 million on the balance sheet in the last financials. And I think, we've been sort of performing along with the GDXJ. We're not on the GDXJ, but I think that's, a good target. We've actually outperformed the GDXJ recently, where companies on the GDXJ have gone down. We've actually stayed fairly constant. So, we've been a pretty solid performer. We've got good analyst coverage from 4 different analysts. You can see on the firm there, or on the bottom of the slide, rather. All of them have price targets north of $2 on us. And so, I think people see the growth potential here. And I think it's really on us to really get, move Gold Rock along, grow the resource and reserves at Pan. We've tried to really focus on operations. We've tried to underpromise, overdeliver, and I think we've done that. We got a bankrupt mine turned around and generating cash flow. We've, upgraded the mine with a crushing circuit without taking on debt. We've increased the resources and reserves twice now. We got our next project permitted, got the PEA done. We're into the feasibility on that. We've acquired a new exploration project. So really, I think there's a lot going on in Nevada. You'll see a lot of work on the feasibility study going on this fall. You'll see metallurgical results starting to come out closer to the end of the year. You'll see drill results coming out both from Pan and from Gold Rock. And then hopefully some results from regional exploration, particularly up at Illiput. And that's kind of the wrap up of the presentation. Nice and short.
Yeah, perfect. I love it. Nice, short, straight to the point. That's for sure. Maybe one insight into the running quarter, because the quarter has only like 8 days left. So Are you happy with production? Is everything on track?
Yeah, I think we've guided that the fourth quarter is going to be our strongest quarter. We had some operational issues with leach pad chemistry in the first quarter of the year back at sort of November, December of last year. We got those sorted out. The leach pad is performing great. We've actually just built a new leach pad extension that we're putting putting ore on and leaching gold. Yeah, so Pan is actually operating really well right now.
Super. Perfect. Tim, thank you very much for the update. That's I love it. Everything is in good shape, and I think you have a lot of upside potential. And what I really love is no debt and a lot of cash on the bank and generating free cash flow. That is really fantastic. So, I would say let's get the quarter done, and we speak soon when you have the numbers to give us an update.
Excellent. Thanks, Jürgen.
Super. Thank you very much, Tim. Yeah, ladies and gentlemen, that was Tim Warman, the CEO of Fiore Gold. And you heard it. Everything is in good shape, except the share price went down with, let's say, all the attacks on gold, on silver we saw in the last 4 or 5 weeks here. And every company was hurt by that. But Fiore Gold, well, let's say, held quite well up. And so I would really suggest have a look on this fantastic company. This is a real growth story on the one hand. On the other hand, super solid with a price earning ratio well below 5. And this is what we like. Thanks for watching us, and bye-bye from Switzerland.